Indian markets are set to post their worst half-yearly performance in nearly 2 years, with the Sensex and the Nifty 50 slipping 9% each. The sentiment soured on account of an elongated geopolitical conflict between Russia and Ukraine, rise in key commodity prices, and central banks' actions to tame galloping inflation. The fall in mid and small cap indices was sharper, with both these indexes slipping 12% and 15% respectively on the BSE during this period. Analysts believe the second half of calendar year 2022 too will be marred by volatility.
Though commodity prices have started to correct, the second half of calendar 2022 will likely remain challenging for most economies and markets. Global growth may remain subdued and some economies may enter recession. This recession may be sharp and swift for a majority of countries, but the effects of that may linger on for a few quarters. These possibilities may get discounted soon and markets may fall more and make a bottom in the second half of 2022, post which a recovery can follow. Indian economy and equity markets may show higher resilience than most other markets in the second half of 2022. However, given the expected aversion to equities globally in view of rising rates and peaking of profitability, key thing to watch out for would be the FPI flows in India. If FPIs continue to be sellers in Indian markets, then despite the relative strong fundamentals of the economy, indices may remain under pressure.
A slowdown in corporate earnings is another headwind that the markets may have to face going ahead. According to analysts at Credit Suisse Wealth Management, amid high inflation and aggressive tightening by central banks, the downside risks to earnings growth are emerging. While we do not expect major earnings cut for Indian equities, some moderation in earnings growth cannot be ruled out, especially if global headwinds worsen further. That said, despite multiple headwinds, analysts suggest investors start nibbling into beaten down stocks and sectors selectively.
If FPIs continue to be sellers, their focus would be large caps, where their ownership levels are high and liquidity in the markets are also comfortable. These includes IT, financials, consumer staples, discretionary, auto, etc., which all these sectors could bear the brunt of FPI selling pressure. Traditional defensives may keep seeing buying on dips as they become more attractive. This includes IT, FMCG and pharma to an extent. New age internet companies and other high PE sectors could also remain under pressure. Cyclical stocks, including metals, auto and banks, could become attractive and may see bottom fishing.
On Thursday, markets are likely to remain volatile on the last day of futures and options expiry for the June series.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.